Good morning, everyone. Welcome to our Thursday morning trading room. Hold on a second here. There we go. Get the screen share going on. Make sure I'm sharing the right screen. There. Good. All right. So yesterday the market, a little bit of a roller coaster, kind of seesawing back and forth as we anticipated. And then when the FOMC reports came out, well, the market fell off sharply. Let's take a look here at the Eagle, see what's been going on in the overnight. Fairly quiet, as you can see in the overnight. And then they did resume that downtrend. So we have a slight gap now to the upside off this morning's open. And this current bit of trading that's going on, I don't know, to my eye, it seems to have a little bit of a bear flag kind of shape to it. That tight little congestion, pullback. So we're probably going to get a sell signal here and maybe a bearish break. For those of you looking for your first in-sync Eagle signal, I think we're still on hold. We don't have it just yet. The trading band, the cloud, very, very narrow. It's a little bit too difficult to discern whether it's more bullish or bearish. But if you wanted to do a trend line break, that would be a good way to get into this market as well. In which case, I think we're seeing that first in-sync Eagle signal developing right now. But it's still very early here. And the market fairly content moving back and forth. You can see the hawk, a lot of yellow bars. Yellow bars on the hawk mean that the market is probably consolidating a little bit. And you're going to notice these yellow bars, when they cluster, they're going to print at more or less the same price level. It's looking like somewhere around 66.12-ish right now. And you can just see visually as well how sideways the market looks. People always ask me, hey, Eric, what's the best way to trade a sideways market? Well, the best way to trade a sideways market is to avoid it, is just to keep away until we get outside of that sideways trading range. Wow, way to go, Mark. Mark killing it here this morning, pre-market. You're going to make me start getting up early, Mark. Mark says, good morning, Eric. Took two pre-market late filter entries this morning, one to the downside at 4:43 my time. Ooh, yes, that would be this bad boy right there. That's practically textbook. Very nice. Second one to the upside at 5:25. And that would be this one right here on the trend change. Both were 5-card trades. I'm already up over $1,500. Nicely done, Mark. That deserves a round of applause. And again, that just goes to the power of being able to trade multiple contracts, right? Each trade worth about $300, and I think the majority of that was probably on this move here, average, of course. And Mark writes, the runner on that first one was good for over 500 by itself. Figured I'd hang out a bit for the US session, see if any more opportunities present. Well, thank you for hanging out. Mark says, but considering the great week I've had so far, I'm taking tomorrow off. Nicely done. I need to go to the airport tomorrow morning, so that's why we're not having a trading room Friday morning. And hopefully I will have everything up and running for Monday. But if you show up Monday and I'm not here, please try again Tuesday. It's probably just a little technical difficulty, but I hope to have everything resolved. If not, I will send you an email. Yeah, Mark says, thanks, Eric. Now that the cat's out of the bag, everyone's going to get up early. Sometimes the overnight sessions can be very steady. You know, the Europeans tend to trade perhaps a little bit more methodically than North Americans. I don't know. It's not the native session, of course, when you're looking at those times. So the NASDAQ, of course, a North American market, and this going on during the London session. They're not always like that, of course. Sometimes they can be a little bit flat. And now we're a little sideways again. So a little bit of a bearish push, a little bit of a bullish pushback, just kind of reinforcing the sideways trading range. If you're inclined, you know, with a sideways trading range, we know there is buying down here. There is selling up here. The middle, relatively neutral. The best plan of action is to allow the market to break out, wait for it to retest and prove to you that it can stay out, and then look for your next opportunity to buy or sell. So that's what a bullish breakout would look like. This is what a bearish break looks like. And you can see the danger if we played the breakout move a little bit tight here below the original low right here. You can see how the market broke out, but the breakout didn't stick. Right? Breaks out, goes right back into the trading range, and where are you going to put your stops that you can ride out a move like that? That's a toughie. This is the only way that you can reasonably sure that a breakout's going to stick. Trading friend of mine always used to say, never trust a breakout. So it's looking like we're still fairly sideways, fairly flat. Of course, you can look for buying opportunities off of the bottom end of the trading range and selling opportunities off the top end. The range really isn't that wide, though. I don't know if you really want to be bothered with that. All right, that's a better bearish break. So our trading range looking something like this. Let's see what kind of retest we get now. All right, this is interesting. We're getting the first in-sync eagle signal after the cloud crosses. We do have a second push entry opportunity on this one, so you could try to short it. Can I cover it to there? Ooh, I can. We're seeing a little bit of a retest now of the bottom end of the trading range. This is just your basic trend change signal in the eagle. Now, it's okay if it drifts into the previous trading range a little bit, but if it starts to get up here toward the center of the trading range, then you can probably figure the breakout was a false one. And that's kind of how it's shaping up right now. Okay, a hard edge bounce. If you're not sure, you can set your entry a little bit deeper. To avoid those one tick trends, those annoying one tick trends. Oh, and it looks like I got slipped a tick as well. All right, let's see what the bears got. Or if the market's just going to continue going sideways yet again. All right. I'm imagining a little bit of a trend line here, and we're getting a little bit of a bullish break. There should be some bearish pushback from that. I hope. Look at that, right back into the trading range again. Doggone it. Well, they're going to tag me out here in a second. Why is it my first trade has to be a stinker? I'm going to stop doing my first trade and just go straight on to my second. All right, well, there's going to be a buy opportunity here somewhere. Here on the Raptor now, we're getting the cloud crossover signal. You could just buy into that just so that you have that trade going. Stops should be fairly deep, however. Below that swing is ideal. Again, I don't normally reverse on a position, but that was a solid sell signal. There was every reason to believe that market was poised to go lower. And obviously it did not. So if the market doesn't want to go lower, there's a pretty good chance it's going to try to go higher. And so I'll give it a try now to the long side. And hopefully the market will continue a little bit higher. I'm going to adjust my break even here a little bit, bring it up a little bit tighter to my profit objective. Hopefully I won't get tagged out prematurely here. Yeah, Mark says, just rename your first trade as your second. Okay, I'll do that. All right, getting some decent follow through. Okay, here comes the first big swing. Hey, way to go, Mark. Mark says, I picked up that Falcon trend change signal. And yeah, so far it's got some really good follow through to it. So the Falcon trend change, of course, it occurs when the trend line changes color. It's essentially the first signal, again, where everything is in sync. But typically you've got this move that changes the trend line color. You got the pushback, and then you've got the trend or the new trend resuming. All right, it looks like I got kicked out on that little bit of a pushback. And dug my way a little bit out of the hole. And then I made for myself. Okay, and now things looking a little bit more bullish perhaps. Okay, Ryman's asking, good morning, Eric. You've mentioned Mark's favorite trade. I'm curious, is that trade on the Hawk sheet? Well, on the Hawk, I know that Mark is partial to the first micro macro crossover signal, which is the one we kind of went over yesterday, which is that first signal that is in sync on the Hawk. So your trend lines cross, and that's that first signal that comes in sync. But I think Mark really leans heavily on the Falcon and your late filter entry signal. I do have a cheat sheet for the Falcon if you would like it, but really the two major signals that you want to focus on with the Falcon. First one is the trend change signal, the one I just showed you. So it's the first, the shortcut way of thinking about it is it's the first in sync signal after the trend line changes color. So you've got green bars, green signal, green filter. So this would be a trend change signal here. This would be a trend change signal here. You're going to find that the best ones kind of develop early. They get this quick little up, down, up action. This one is almost on the borderline. If it developed much lower, like let's say this signal did not print, and rather it first printed down here, that's fairly well removed from where the trend line changed color. So this one would be maybe a little bit suspect, Not to say it wouldn't work out. This is almost the limit. You know, you see the trend line change color. You're expecting the signal to develop. Here is another one that developed. And again, it has that typical up, down, up. And here on the downside, you've got the down, up, down. You can also see that it attempted to do a trend change signal right here. Right here would be the down that changed the trend line color from green to red. Here's the up. It was only one bar, but it's still up. And then here comes the down. Unfortunately, the signal parameters were not met, so no signal printed, but you can see how that structure repeats itself time and again. As with all your signals, it's important to keep things in context. You can probably find trend change signals in here somewhere that did not work out or at least struggled to work out. And I hope that by looking at a chart like this, you can recognize the market is aimless, that there is no follow through in this market. All right, so you do need to temper that with context. I think it's probably fair to say it's Mark's bread and butter trade is the late filter entry signal. This is a very, very, very reliable signal. In fact, when this signal prints on the Falcon, it's almost as good as money in the bank. The late filter entry signal occurs when your trend line, or I should start with the filter. When your filter changes color, so your filter goes from red to green, back to red. It has to come back in sync. However, your trend line never changes color. That is the late filter entry signal. So it's two parts. You got to see your filter go out of sync and come back into sync. However, your trend line never changes color. You're also going to notice as you study these that when the trend line goes fairly flat versus being more vertical, that the signal will tend to have greater reliability and sometimes even huge follow through, as it did in this instance right here. Late filter entry signals, sometimes they can piggyback on a trend change signal as well, but very often they're a continuation signal. Very often they develop within an established trend. Late filter entry signals, as with all signals, get a little bit tired. So your first late filter entry signal is probably a fairly reliable signal. Your second late entry filter signal is probably okay. But if the trend is long enough that you're getting a third and maybe even a fourth, I would tend to be a little bit suspect. Just because the duration of the trend. Again, it goes back to context. And I would make an exercise of just scrolling back through your chart and see if you can spot late filter entry signals on your own. That's really how you learn to identify them. So you see where the filter changes, you see the corresponding signal. No, this is not a late filter entry because the trend line did not remain in sync. They actually occur fairly regularly. They're not usually this drawn out. I don't normally have to go this far back in my chart to find you one. Ah, here we go. Here's a nice one, a little quick one. Oh, actually we have several. Okay, this is worth explaining too. I would not count these as 3 late filter entry signals. So, where I just said the first one, it tends to be the most reliable. The second one is probably okay, but the third one I would probably not do. If I was looking at this, I would interpret this all as one signal because price-wise, it hasn't really gone anywhere. Technically, these are 3 independent late filter entry signals, but I think you understand what I say when the trend is developing. Like, here's the first one, here's the second one. If we didn't, but let's just say if we got the third one up here, I would be a little bit suspect of that. As you can see, even the third signal, just the fact that it's the third signal within this swing of the trend made it a little bit suspect. The market was trending for, looks like, a good half hour. And hey, markets get tired. They get tired of going backwards and forwards for too long. My time zone is Pacific, Phil. So, yeah, if you keep a lookout for those, they are very reliable, very profitable. And also, to Mark's credit, he's very picky about taking his trades. He doesn't just jump on any old signal. He'll sit there and wait and wait and wait and wait until he gets one. Yeah, Dan says we're working on one now, and you're absolutely correct. Up until a couple of bars ago, this is a possible late filter entry signal. So we have all the parameters. The signal comes back into sync. Now you can set your trade, and this is what your trade would look like. Now, the signal got spoiled right here by the green trend line, so you can close that up. But yes, you're absolutely correct. Now, as you become a little bit more refined with the signal, these instances here, where the trend line goes out of sync for a single bar, you may start to ignore, or pardon me, you may start to accept those. Because what's happened here is probably this bar right here went one tick too high, and that spoiled the trend line. But if you're going to be a purist, even that would negate the signal. Very often, one bar, I'll ignore it. But if you're like we are right now, we have 5-6 bars out of sync, the trend line, definitely a big green patch through there. This no longer qualifies as a late filter entry signal. So a great question. Thanks for bringing that one up, Ryman. A couple of pointers here from Mark. Mark says, that's what I did early on myself, was to go back for months and study the late filters and how they occurred. Going back in time to identify how and why things worked was key to my learning curve. That's the beauty of trading, is we can get into our time machine and we can scroll back in the history of the chart and we can take a look at each signal and we can say, all right, okay, so somewhere in here there's a late filter entry signal. Aha, right here. Okay, so there's a late filter entry signal. Let's say I took it like so. Why did that trade work? Why did that trade not work? Right? And really, a lot of times you just have to sit back and look at it for a little bit And you may look at the chart and you may say, maybe this market was in a downtrend. Maybe I should have stayed with the downtrend. Yeah, that's what it's looking like to me. The times that you're going to be wrong are probably going to be one of two things. You're going to be trading against the trend, or you're going to be trading when there is no trend. Those tend to be the killers. If you're still stumped, if you right click on your chart, you can go down here to image, and you can either save it or you can email it to me directly, or you can just make a note of the time and the day that the signal occurred. So you can click on your chart and be sure to tell me what time zone you're trading from. And I'll go back on my chart and I'll see if I can't help you identify why that trade may not have worked. But you'll learn a lot by doing your own homework. I know it's an old saw, but I can tell you all day long, but until you study it for yourself and you convince yourself that these signals are valid, you'll never really gain the independence of being an independent trader. Mark asks or says, I've accepted those where the trend line goes out for one bar, but I used the trend line flatness as a gauge for those. Yeah, that's a really flat trend line makes for a very, very inviting late filter entry signal. The flatter the trend line, the more reliable I think the signal will be. Both these instances, this one here and this one here, have pretty flat trend lines. If I had a late filter entry signal develop early and the trend line was perhaps a little bit steeper, a little bit more like that, I would still be inclined to take it just because it was an early signal. David's asking what is the equivalent of the signal in the Raptor. In most cases, David, it will be the number 3 signal. The number 3 signal is a continuation signal. And, in this case here, it was actually the trend change signal. This signal right here coincides with the late filter entry. Oh, see, now they made a liar out of me. And the second one was actually a number 2 signal. Most times, it will be a number 3. Most times. David asks, how do you make the data display on your chart? I've got a mouse with a wheel on it. If you push down on the mouse on that wheel, you'll get the data box. If you have a 3-button mouse, if you click the middle button, you should get the data. Yeah, the Raptor, again, because it's a hybrid, it does incorporate elements of all 3 of the birds. So you're going to be getting, like I said, most times the late filter entry will display as a number 3, as a hard edge bounce. But as you can see this morning, one was a number 1, the other one was a number 2. So All right. A big bull push higher. The market a little bit at a crossroads now. If we go back here to our opening trading range, you can see the market came up, gave us a retest after the breakout. Little bit of a move higher, not much though. I would expect a little bit more follow through out of that. So hopefully they don't drift too deep and they come back with yet another buy. But as far as the eagle goes, we actually have a rule of 3 signal. So the eagle is actually looking a little bit more bearish here at the moment. This is the counter trend signal on the eagle. All right, well, here come the bears trying to knock the market down again. We'll see if that sticks. All right, so here again, we've got one of these situations where which way is this market really leaning this morning? We had the bear move out of the gate. We had a really strong bullish pushback. Now the sellers are coming back. Which way are we going to try to take this market? Speaking of late filter entries and relatively flat trend lines, we have one right here now on the Falcon. Now, we'll see what kind of follow through we get here. Hopefully we get low enough to find our profit objective. This is a little bit dicey though, because like I said, the trend itself is in question. And now another possible late filter entry. The signal hasn't formed yet. The filter's still out of sync. And I bet if I shoot a fib level on this last move, I bet you we're sitting somewhere around the 50%. I can just tell by the way the market is hesitating. Yeah, see, we're actually down here by the 62%. So a lot of fib traders are getting excited now. And now the trend line actually spoiling a little bit. This will be the last chance for the sellers now to get this market back. And you could even bring your break even in a little. Okay, so there you go. It took a little bit longer than sometimes it normally would, but the late filter entry comes through again. Hooray! That was just a single contract, but you know, the market has potential to move lower here. So if you have the ability to have a runner in play, this would be actually a nice spot for a runner as well. But I'm content to take the profit where I have it. I'm almost out of my hole. Which is fine with me. For you Raptor traders, you actually got in a little bit earlier than that late filter signal. This one almost becoming a number 3 signal, almost close enough to that hard edge that you could have called it as a number 3. But the Raptor actually giving this the early signal, the advanced signal. No doubt part of that coming from the hawk element in the Raptor. So I was thinking the buyers were going to pull the market higher, but not anymore. The sellers putting a pretty good dent in their effort. But the market's also working itself into a bit of a corner. Trying to go higher, trying to go lower, trying to go higher again, trying to go lower. Oh, there you go. You can see a good follow through now on that signal, that late filter entry signal. So like I said, oh, and here was another one, doggone it. Look away for a moment and miss another opportunity. But there is another late filter entry signal right here. And that one too, no trouble finding the profit objective there. If you missed part of this move, don't fret. The market will make a pullback through here somewhere. All right, back now to the low of the morning, and they're blowing right through that. Nicely done, Mark. Mark says took that late filter, or the trend change signal that developed back at 66.13 half, and then into a late filter. The follow through I'm getting this morning is incredible. I'm done after this trade. The follow through is incredible this morning after what we dealt with the last couple of days, where the market was really sideways. It's a very welcome change to get a market that's following through like this. The other thing, of course, you can do when you have a market with an obvious trend, and I've mentioned this before, but you can just pick up on one of your discretionary signals. These follow-up signals, all the programming parameters are met, they just don't qualify as one of our high probability signals. Personally, I think you're better off waiting for a little bit of a pullback. So you can see the low of the morning at 65.90, or low of opening range, I should say. And now we've breached that, and we're going to get a little bit of a pullback, and there should be another opportunity in here somewhere. Mark says he was using the ATR, just got tagged out. Nice job. Yeah, the ATR is a really great strategy for trailing your stops. All right. Got a very strong declining market, and somewhere in here we should get another follow-up signal. All right, so we're seeing a little bit of a test of the extreme here. This is, again, one of these discretionary signals. If you were just looking for a place to get in, you could probably look to short it something like so. Ooh, better get that order ready. So all I'm doing here is I'm looking, okay, a signal developed. It wasn't quite a hard edge bounce. It was kind of mid-cloud, but it's one of these discretionary signals. I do have a very solid second push opportunity. I don't think I would crowd this trade too much. That's why I'm giving it a few extra ticks here on the short side. But it does look as though we're getting a half decent bounce off of the low of opening range. And hopefully the sellers will just continue to push it here and get down to the profit target. Now, it's always better to hold out for the high probability trades. And again, this is where it goes back to being a little bit more patient with your trading. Ryman says, I like the ATR set at 3.0. Let's take a look at that. You know, the default setting 2.618, it's kind of like a Fibonacci thing. If you're looking at your ATR or whatever stop strategy you've selected, if it looks like it's following the market too tight, then you can make some adjustments to it. I like 3 as well. And you can see it just gives the market a little bit more breathing room. You would have been able to ride out this swing. And if that's still not to your liking, you can adjust it a little bit more, or perhaps you can go to the chandelier is a very conservative stop strategy. It will hold you in a very long time. But yeah, that's why there's so many different stop strategies here, so that you can select one that suits you, and they are all fully customizable. Getting some bullish pushback here now, which is not ideal. Always happens when I try to demonstrate something, or it seems to. Okay, so now we're into the hard edge. The signal that develops from here now will be a hard edge bounce signal. There you go. There's the number 3. You could start to be a little bit more aggressive with your stops. If the sellers fail at this point, well, you could probably afford the early stop out. One nice thing about using your risk parameters is you know that even if you do take the full stop out, you haven't lost more than you can afford, even though it is unpleasant to have a losing trade. You haven't lost so much money that you're going to start blowing up your account. I think that's the key. Last chance for the sellers. If they don't pull it together here, we will see the market reverse and head the other way. They're definitely looking stronger. There's no question. It's starting to look like we've just moved from one great big trading range into another great big trading range. Not holding out too much hope for the trade at this point. I will try to give them every opportunity, but I think I'm going to get tagged out here. Lots of back and forth, as you can see. And that's typical. All right, here's the number one signal. Are the sellers going to pull it together? This is the obstacle right down here. 65.77.5. That's the number we got to get below. Okay, here in number 3. So now we've got the monster push going on. The monster push lower. If this, if they can't get it together here, I can bring my stops in a little bit more. Come on, sellers, you can do it. Come on. So close. What I'm going to do is I'm actually going to bring my break even up. Oop, there we go. Okay, trade's at break even now, and come on. Oh, whew. Oh, that was hard work. By the way, this could be one worth trailing a stop on as well. The momentum definitely seems to be in favor of the bears here this morning. So if you're inclined to try to run out a trade, then that might be one to try. I'm fairly happy with how that one worked out, though. I hit, not just because it was a profitable trade. I'm okay even with a losing trade, believe it or not, so long as I feel that I've managed the trade well. You're not always going to be right. But if you manage your trade correctly, then you can even take solace in some of your losing trades. If you did everything right and the market still went against you, well, sometimes it's just one of those things. And we're getting some, like I said, some decent follow through off that signal as well. So again, highlighting just the importance of trend. being able to stay with trend. Well, after all that hard work, I did get myself back to break even. See, my first trades, my stinkers, always occur early. That's actually why I stopped doing some of these early trades. It's funny, if I were trading on my own, if I didn't have the trading room to moderate, I probably would not start trading until 7 o'clock Pacific, 10 o'clock Eastern. And yes, I would miss some moves, but I would also avoid a lot of losing trades. It's the hazard of being a trade room moderator. People expect you to put trades on. They expect you to do a trade, do something, man. Oh, I've had people actually comment like that in trading rooms where I've been the room moderator, and it was like, do something already. Well, what do you want me to do? People, they have a preconception of what trading should be, and they think, you know, you're shooting from the hip all the time, and you know, the market's going about to reverse, so you get in early on the reverse, and then it swings again the other way, and you get in on that trade. Yeah, it'd be nice. Yeah, Scott says anything before 7 a.m. is called mark money. All right, so looks like the seller's still putting the boots to the buyers, but that is going to come to an end here somewhere, as it looks like we're getting a little bit more pushback now. See the length of each move. This was a huge move lower, and then a big period of consolidation. The buyers trying hard to rally the market each time. Another move lower, not quite as big, and here come the buyers again. They're pushing a little bit harder. There might be a buy in here somewhere. I'm going to get, technically this is a number 2 signal that developed here, even though it didn't print as a number 2, because it was a little bit too far removed from the other swing point, but that is a number 2 signal. If you were inclined to be a buyer, if you wanted to get on board here early, stepping out in front of the trade. I don't know if I'm that brave though. Okay, folks, I have got a meeting to get to at the top of the hour. So if anyone has any questions, please type away. Otherwise, I'm going to have to close up the room here a few minutes early. And a reminder, no trading room tomorrow. That's Friday. And hopefully I will have everything up and running for Monday session on my laptop. I hope. If you're going to continue trading this afternoon, the trend is down in my book. A little bit of profit taking, I think, is to be expected. The buyers are not going to go quietly, but whether we get a big rally out of this today, I don't think so. I think they're going to try to throw the market back into a sideways twist. A move back to 6,600, I think, would be substantial. Certainly a move up to, say, around the 66.15 zone, that would be huge for the buyers. All right, no questions. All right, I will see you on Monday. Hopefully, have a wonderful weekend. Be careful out there. We'll talk to you soon. Bye.